Very interesting things happening in the market. And as always, we want to be one step ahead of everything so we can position accordingly and make great returns. Today on the agenda, we'll discuss a bit of the macro backdrop. There's not much that's changed. I think there's only a couple of new things that have happened. We'll look at the ISM reports, both the manufacturing and the services report for trade idea generation. And then finally, if we have some time, maybe we can pick some earnings apart. There are a few things I would like to discuss. Based on the earnings I've reviewed this week, mainly from the big guys like Google and Facebook or Meta. Before we get started, this is not financial advice. This is purely for educational basis, and all the materials are owned by the Financial Traders Hub. So, few things that we would like to keep track of. I think last week we discussed the RSP. So the RSP, for those who don't know, is the equal weighted version of the S&P 500. Just very quickly in terms of a summary. So the S&P 500 has 500 companies within, but not all of them have the same weights, right? So for instance, Google, Amazon, and so on will have a much bigger weight than the smaller, industrial companies, as an example. So the RSP is slightly different in that all the 500 companies have exactly the same weight. So it gives us a bit of a different view on the market, and it prevents the skewing of things by the big seven or magnificent seven, as they are called, right? Because as we know, the bull market in the last 2 years has been predominantly led by the big seven companies, 7 or 10 companies, and it's basically now the rest of the S&P playing catch up, and we basically look at the RSP as a measure of how how much the other companies within the S&P 500 are also moving, if at all, right? So that's basically how it's looking at the moment. I do see a bit of weakness. You see, like this week's been positive, but it looks like we are headed a bit downwards from here. I think as we get earnings, there's going to be a lot of volatility in these stocks. So keep your eyes peeled. I'm starting to see a bit of weakness in the indices. So even the S&P, the Nasdaq predominantly, I see a bit of weakness there. So therefore, I would tend to be a bit more conservative in terms of the companies I'm trading, and also be a bit more hedged than usual, because I think there might be a bit of volatility ahead. So that's just something to keep in mind. And then on the right, we've got the Magnificent Seven. So that's basically the biggest companies in the S&P 500. Like I said, they've been the ones who've led the rally in the S&P 500. And if we look at the chart in the last few weeks, it seems that we are kind of moving sideways to downwards. So the earnings from Google, Amazon, and even Microsoft, no, Microsoft is not out yet, but Google, Amazon reported numbers that were not particularly that encouraging. Still good numbers, but especially their cloud server segment were not extraordinary. So as you know, the market expects a lot from these companies because they also invest a lot in terms of capex. So investors want to see a good return on their investment. And I think what we saw this quarter was not necessarily to investors' liking. From a business perspective, very good numbers, but investors were expecting a bit more. So that's the thing with tech companies. Investors are a bit impatient and always, asking a lot of these companies. So they want the CEOs and CFOs to just beat and keep raising guidance. And it's not always going to be feasible, because at the end of the day, these numbers come from actual businesses that are being run, which are reflective of, the economic situation under the hood. As we know, GDP has been coming down, so it's still positive, but it's the economy is growing at a slower pace. So we cannot expect that these large companies will keep growing at the same pace as before, and that's what the market is now maybe realizing and pricing into these stocks. So expect a bit of volatility from these top guys. As the earnings come forth, we also need to keep track of them. These are kind of bellwether stocks for us. One of the ideas, if the cloud server expenditure is no longer rising as quickly as before, could we get trade ideas from there? We should, right? Because we know there's a lot of companies that benefit from being part of, let's say, the Amazon web server ecosystem. So a lot of companies, cybersecurity, database companies, a lot of others, right? So as an example, right, you've got Elastic. We know Elastic is closely linked to Amazon Web Server, or it benefits a lot from the ecosystem or being part of the ecosystem. So is there a situation where, the lack of growth, or not the lack of growth, but the slow growth in AWS eventually also means that Elastic will not be growing as quickly as investors were expecting. So these are the kind of things that, you know, you have to be able to think of. I call this lateral thinking. So whenever you see a headline which says Google Cloud server numbers disappoint, don't go outright and short Google. That's not the play. You have to think of the knock-on effects, right? So if people are spending less dollars, or if people are not spending, or the other way to put it, if cloud expenditure is not growing as quickly as in the past, uh, is it only Google that will be suffering from that? Of course not. There are other companies that are more highly leveraged to that situation. So your job is to go find them and understand exactly what's driving expenditure, or what's also causing companies to pull back a little bit. We know that there's been a lot of investment going into AI and so on, but the actual dollars committed to these projects is what matters, right? So we need to get closer to the truth and understand exactly, what could be happening, whether it's just a blip for like one quarter, or whether this is like the start of a big trend. Because Elastic is probably trading at, I don't know, 110 now. If there is a bit of weakness, this could go to 70. Between 110 and 70, that's where you need to be, doing your work and making a bit of money, right? I'm not saying go short it outright. Just, get in the mind of a trader and start thinking along these lines, because everything is interconnected. You basically just need to be able to understand how everything links together, and find a situation that maybe investors and traders have not yet realized would happen. Moving on, this is one thing we've been discussing for a number of weeks now. So the oil markets, they were up slightly on the week, but if you look at the picture, it's not a very bullish setup. I still think there's going to be a bit of weakness for US oil. I think global demand could come down from here with China, India, and a few of the major economies in Europe slowing down a bit. A little bit of weakness from the US will cause the global demand numbers to go down quite a bit, and at the same time, we've got a bit of supply. We've all for the last 3-4 years we've always had supply constraints, but at the end of the day, it's a question of whether global demand will hold up or not. Because if we start seeing, let's say, the global PMIs coming down, it basically means that countries are going to be needing less oil, right? Or less oil than what was projected in the past. And this would be a good situation, for estimates on global demand to be revised downwards. What's also important to note is, oil is a physical commodity. So these prices are set in real time by physical demand and supply. The crude oil index itself, it's a it's traded a lot, right? But if you look at individual components, these are more physical commodities. So less speculation, more actual trading that's happening on the ground. So there might be a situation where we start paying a bit more attention to oil. I mean, I've been working on this for a number of months now. And, similar to housing, we might come up with another theme where we start shorting companies that are involved in the oil segment. So if you remember, for housing, Bhavan, when did we start discussing about the housing short? August something, right?
Yeah, that's when you first started to talk about it.
Yeah, so we were very, very early on this trend, and very patient as well. It's only, I think, this week or last week that we, started finding ideas as a group and putting it in the portfolio. I think there's a lot of downside potentially in a lot of companies involved in the housing segment. So even here, right, we want to be a bit early. I think we're not early for oil because it's already moved. The time to work on this was probably October last year. I think some of you have missed the boat, but I think there would be still opportunities that come from here. So always good to keep track of this, and also, you know, just research it as a sector, because it's you're gonna understand the different players, what moves the market, what are the different companies involved in the segment doing. It's a big industry. It's not just everyone extracting oil from the ground. It's refining, transporting, shipping oil, and so on. So there's a big industry around this, and research is never lost, as I always say. And also keep in mind, oil can trade up and down depending on whether hostilities increase or decrease in the Middle East. With Trump, the expectation was that hostilities will decrease. He's trying to work with all the partners in the Middle East, including Saudi Arabia, which is one, or like the second most or second biggest oil producer in the world. So he's trying to get them to pump a bit more oil, because Trump wants the oil price to go lower. I think he understands. He's not as frivolous as people think he is. I think he knows that a lot of the measures he's bringing about is highly inflationary. And to counter this, I think he wants a lower US oil price, or WTI price. I think that's what he has in mind, and that's his play. But the problem is, that requires not only the US to be party of this, right? If Saudi does not agree to his to his proposal, which can happen given their stance on Gaza and what the US has announced. So as things develop, we'll get an understanding of where this could lead. But as traders, we need to have our trade ideas ready. We need to know, the industry segment, and make sure that if oil goes one way or the other, we are always prepared with ideas in our portfolio. One thing that the financial media is totally not even paying attention to, it's what's happening in Japan. So we've been discussing this like comprehensively now, right? Japan and the US are on totally different or totally opposite tracks when it comes to interest rate policy. So the US is kind of keeping rates where they are, or cutting. That's the trajectory. While Japan is saying that they are going to start hiking. And Japan started hiking from 0.25%. So there's a lot of room for them to keep hiking, and it's going to be quite significant, right? While the US still has the luxury of keeping rates where they are, and if they start cutting, there's probably another 1.5% that they could easily do in a number of months, right? So all of this means that we could see further weakness in the USD versus the Japanese yen, and that doesn't bode well for the big carry trade that's there, right? For many years, people have been borrowing in Japanese yen to invest in US assets. And as these trends reverse now, right, we're still at the beginning of this big reversal. It's gonna be a big move, right? So all the guys who've borrowed in Japanese yen and their costs are now increasing because, firstly, the interest rate is higher. Secondly, the foreign exchange rate is also much more punitive from their perspective, right? If you have to convert dollars into Japanese yen. And thirdly, if US assets start to underperform, that's like a trifecta of factors that would just make these people reverse the trade, right? And we know a lot of this money has gone into the US tech sector. So we'll see a bit later. What's happening in the US tech sector is a bit interesting in that it's no longer leading the market. So these are the things that as traders you have to be on top of. You should not just be happy with saying, "Oh, the S&P is up 15%." That everyone can figure that out, right? You don't get paid for reading a number. What you need to be a lot more attuned to is what's been driving the S&P up, right? What are the sectors that have led the S&P up, and what are the sectors that are underperforming? And in between these two, that's where you start finding ideas, right? And you need to be on top of all these factors because you'll only see the headlines when the move has already happened. And as a trader, that's not what you need. As a trader, you need to be participating as the move is unfolding. And then, if you want, you can read headlines later. So that's a slight change in mindset that's required to be successful as a trader. You need to be the guy who predicts this move, participates in them, and then as the headlines are coming out and people on Twitter and people are writing blogs and all of this, you've basically already taken profits. You're just reading these for entertainment or confirmation in most cases. So let's move to Coifin. I just want to quickly look at the sector performance. Let's look at the sector performance. So I'm on Coifin, and basically how you do this is you go into market dashboard, click on US sectors, and then I'm basically sorting in descending order by the weekly performance of the sectors, right? So on a weekly basis, the S&P was down slightly, 0.17. A large part of the gains were lost on Thursday and Friday. So towards the end of the week, I think that's when sentiment soured. So we need to keep track of this because I wouldn't say it's been choppy, but I would say there's definitely been a change in market sentiment and leadership. So what that means is a lot of the participants in financial markets are now thinking very differently from how they used to. If we look at the sector performance, right? So basically, the way to look at this, especially for guys who are new here, so the S&P on the week was down 0.17, right? So basically what we'll say is every sector that's been up more than negative 0.17 would be termed as having outperformed the S&P. So in this case, you probably say all these sectors that are green here have outperformed the S&P, and then all of these have underperformed the S&P. One thing that's very interesting to note is the consumer discretionary segment was the worst performing after many, many weeks of being outperformers, right? So those who've been on this webinar for a few weeks now, we've been discussing how strong the consumer discretionary segment has been. Yeah. Even if you were to look at this, right? So this is the consumer discretionary sector. It's been up from, I think, start of Q4 last year, and now it looks like if you look here, right? I cannot move my mouse, but you can see, right? It's put in a top maybe around December, and now it's put in a second top, which is lower in the middle of, let's say, not middle, but start of February. So that's something to keep an eye on, because positioning has been quite bullish in the consumer discretionary segment, and we also have to understand what actually made this happen. So on Friday, there was the consumer sentiment report that came out. The numbers were not bad, but I think I probably need to show this to you. So we've discussed this in the Discord server. If you look at this graph over here, right, and this is from COVID onwards, right? So COVID was here, massive drop in consumer sentiment, and then a big rise after the stimulus, and then a gradual fall, and then eventually it troughed and it started moving up from there. And now we've kind of reached a point where, it's been stagnant for a number of weeks or number of months, and we don't really know whether we're going to go up from here or lower, right? So it came in at 67.5, and historically, similar to the ISM, right? For the ISM, if you're above 50, it indicates expansion. For the consumer sentiment index, I think if you're above 70 or 75, it indicates GDP growth, right? I'd have to go back to the statistical analysis and figure out exactly what that level is. But that's kind of the statistically significant level where, when consumer sentiment is above that level, it's commensurate with GDP growth, right? In this case, you can see, right, it's not necessarily been trending up. And if you look at this, you can understand why the consumer discretionary segment is probably now, not so exciting. Quite interestingly, they also give this information split by Democrat, Independent, and Republican. So this is a survey at the end of the day, and of course, depending on your political affiliation, you'd feel more bullish or more bearish on how the economy is doing, right? What's interesting is to see that even now the Republicans have started to feel, it's almost like the whole election fever is now tapering off, right? So you would not expect Democrats to say anything positive about the economy. That's normal. But to see the Republicans also now probably peaking, I think, that has a bit of predictive value. But most importantly, that's actually what matters a lot more. In the survey, consumers are also asked for the expectations of future inflation. So for 1 year, and I think 5 to 10 years as well. And on the short-term inflation expectations, they the analysts or market participants were expecting that to come at 3.3%. It came in at 4.3%, which is massive, right? 1%, 1% in inflation extra is massive. It's not a small deal, right? And if you look at the graph here, the short-term measure of inflation tends to be quite volatile, right? And what this is saying to us is, if we look at the financial media, everyone seems to say that inflation has been conquered by the Fed and we're heading back to 2%. What we've been seeing is all the leading indicators of inflation have been indicating that we'll soon start seeing inflation ahead of us. And of course, markets don't move when inflation has already happened. Markets will move as expectations are shifting. And I think the move down in consumer discretionary is a combination of the sentiment not rising and also that consumers are starting to feel that inflation will be higher than what they were expecting before. So think about it, right? If you think inflation is gonna creep up, you're gonna behave differently as a consumer, right? So that's basically what the market is now trying to price in. So if you thought that consumer discretionary is a place where you would be finding a lot of momentum driven longs, I'd have to caution you against that because that period is gone. You've missed that boat. Now it's probably something that you need to be researching your companies a lot better and make sure that the growth profile of these companies are still intact. As an example, a lot of the restaurant companies, especially the mid caps, have been, rising a lot, right? With not necessarily results or fundamentals supporting them. So there could be areas where we go in and we find a company that has risen a lot in terms of the stock price, but fundamentals have not necessarily uh, come through as quickly. So there could be a bit of downside there. And if there is an earnings or something that's going to reveal to investors that growth rates are not going to go higher, I think we could have a meaningful reversal in many of these stocks. So I don't think we are yet to see like a Wingstop moment, but there are these companies, right? Kava, for instance. So that's a mid cap. It's actually a large cap now, so it's growing quite a bit. Um, if we look at the results here and we figure out that maybe the growth profile is slowing and that's not priced in yet in the stock, you know, at the moment the PE ratio is it's ridiculous. I think it's around 120 on a forward-looking basis. Let me just find it out. Uh, yeah, it's like 235 on a forward PE basis. And analysts are basically expecting they're expecting revenue to grow, let's say 20 in the 25% midway, right? Uh, let's say best case scenario, this grows by 25%. Um, they're expecting 30% and then 35% growth in the EPS. Not impossible, but we have to look under the hood and understand, are these numbers possible? Because who's to say that this cannot go down to 120, right? Between 235 times PE to let's say even 150 or even 180, that's a big move in the stock price, right? And you don't need a lot to cause these stocks to correct meaningfully. We've seen this in Wingstop and many other stocks, right? This week we also had earnings for Chipotle, so that's another bellwether stock for the restaurant industry. You would see that earnings were not necessarily the best; they missed on revenue. So what that indicates to me is that they're finding it difficult to grow, right? I mean, these guys are already like a very big group, so it's not surprising that they find it difficult to grow at high rates. But the revenue is not actually beating expectations, and these are the types of things that we have to be well aware of and try to see where we can use that information. Because if you review the CMG earnings report, they will tell you exactly what they think of the consumer segment and whether they expect spending to increase or not. And also what are the challenges? Maybe they're having cost challenges as well. And a lot of these cost challenges would not be specific to just one company. It's normally industry wide. As an example, let's say if there's a bird flu, it's not just one company that gets impacted. It's everyone that has significant input costs for chicken and so on that will be impacted. So that's why we need to be on top of this. The next bellwether is also Starbucks. So Starbucks has been on a tear. Uh, Earnings were, not necessarily massively, massively good, but they kind of scraped through, and the market kind of like that. Um, I think that's another stock with a lot of downside potential. The market is probably giving way too much importance to, like a new CEO and whatnot. If you sell crap coffee at the end of the day, the CEO cannot do much. And I think Starbucks has a lot of issues and probably, at some point it will peak and come down from here. So these are the companies to watch out because they will give you a very good idea of what the consumer is doing. Yeah, probably we need to discuss these in the Discord server because we could have very good shorts here in some of these companies. Yeah. So moving back to the sector analysis, one of the main things to realize here is that I just want you to maybe now unmute and let me know what you think of these moves. Is this a risk on or risk off type of market when you look at these sector performances on the week?
I would go more like risk off
Why would you say that?
because it's going more to energy, real estate. Technology seems a bit odd here
Hmm.
in Matters, but it's probably because of a lot of earnings for technology companies.
Yeah, there's still a lot coming.
Yeah,
But also, it's very important to read this not just as weekly numbers. Look at the monthly too. Look at technology, right? Uh, this is tech. So you can see, right? It seems to me that it's now peaked.
yeah,
And if you look on a monthly basis, so on a yearly basis, tech is up like 15%, right? Great. But if you look at the month on a monthly basis, now it's starting to show a negative. It's still up on a weekly basis, but this is a big change, right? And this is basically the sentiment change that I was alluding to earlier. So we have to be well aware of this because given all the conditions that we've listed, let's say inflation coming back, maybe a little bit of weakness in USD Japanese yen, all of these are kind of paving the way for a bit of a sell-off in tech, right?
yes,
I mean, we've got a lot of long ideas within tech, right? Pinterest, GitLab, a few others, BlackBerry, whatnot. But what we haven't discussed is where are the shorts in the tech sector. And this is the kind of thing that we have to do as traders. We even if we have a bearish view on tech, there are many very, very good companies within tech, and there are certainly longs, but we also have to find the shorts because if the tech sector falls by 1%, the candidates that we find are short would sell off by 5-10%, right? Because tech is also, it's that kind of a sector, right? It's high beta. So you can easily find companies that sell off 10, 15, 20, 30% in the space of four weeks. There are many, many within the index that we can find. And very similar to how we find Pinterest and GitLab and a few of these others, it's always certainly going to happen from KPIs weakening or not getting stronger, right?
yeah,
And if we are able to find these companies, that's a massive win. Like C3.ai and a few others. Yeah.
yeah.
And also, tech is that kind of a space where you'd have a lot of shareholder-based compensation. So when things are not great, investors put a lot of emphasis on these things that they normally just shut an eye on, right? No one likes it, but they're like, okay, but this company is growing and the whole market is wanting to buy it, so I'm just going to participate. And then 2 quarters later, no one wants the company, and now everyone starts finding, things that are not great with the company, and of course they start selling it off. So I think if you're taking notes, one of the things I'd like you to write here is a reversal in consumer discretionary sector. That's a big risk off move. Energy is still up on the week, but it's not like an emphatic move, right? So it's a bit of, if you ask me, I think when I look at materials, industrials also selling off, this is a clear move away from cyclicals. Yeah. I don't know if it's a start of a new trend or if it's basically just a bit of a correction, because cyclicals have been doing really well here. If you look on a monthly basis, materials are up 5%, industrials up 3.8%, consumer discretionary was up probably 3% before this big move, 3-4% before this big move. So they've been doing relatively well, and the correction that we're seeing now is on the back of very strong moves in the past. But the big reversal in consumer discretionary this week worries me a bit, and I suspect this is probably the start of an unfolding trend, and we need to be on top of this, because you would have seen, right, with the Trump election, a lot of stocks just went up 20%, because there was a lot of expectations that people will have more money and he'll abolish income tax, and all this is like highly stimulative, right? If it's putting dollars back into the pocket of people, they more likely to spend and spend lavishly, right? We're talking of the US here. So even if you give people $500, they will go out and spend $1,000. That's the nature of the beast we're discussing here. So to have consumer discretionary reversed that strongly, given all the backdrop that we know about, with income tax being, supposedly abolished eventually, that's a big signal from the market. But anyway, we'll have to keep an eye on this week in, week out, and I suspect what we'll start seeing is a bit of correction here. And the other thing for you to write down is this possible reversal in tech. Yeah. So if you recall, right, for months we've been seeing tech leading the S&P 500, mainly in first half of last year, and then towards the second year, we've started seeing tech lose that leadership position. I think that's probably gone now, and tech is probably just going to trade sideways and even down from here. The other thing to note is the strong performance of financials. So financials have been strong not just in the US, but also in Europe. I think when we talk of financials, we're talking mainly banks and insurance companies. So you would have seen in the Discord server, we're talking a bit about insurance brokers and so on. It's well aligned with this type of performance that the market is showing us. So whenever we're trying to find an idea, we also want to make sure that the market is paying attention to these types of spaces, and not just, we find an idea as a pure fundamentalist and then we stick to our guns and we're like, the stock has to rally because fair value is 20% above what the share price is indicating. That's not how the market works, right? Yeah, that's what I wanted you to kind of pay attention to. And also consumer staples have been up on the week, and that's another move towards defensive. So we have to be a bit careful here. When we look at companies like Symbiotic and so on, they are part of industrials, right? By and large. So if industrial is not having positive sentiment around it, and if you were probably thinking of going back into Symbiotic, you probably need to be a bit careful. Maybe just structure your trades conservatively or find a hedge accordingly. Let's move on to industries. So now, if we look at actual industries within these sectors, what do you see? What strikes you? What's the first thing that strikes you?
Home builders are down completely.
Yeah.
Okay,
Is this a
and then
surprise?
sorry?
Is this a surprise?
No, that's what we've been discussing for quite a bit.
So home builders were like the worst performer. Yeah.
Yeah.
Does it make sense now, Bhavan, why we had to be a bit, we had to show a bit of urgency with our shorts on the home building side?
Yeah, makes sense.
So, normally we don't want to be in a situation where we are rushing to find, the right companies along the value chain to be long or short. We want to be well prepared ahead of time and then be able to think through things. But sometimes things happen in the market where you have to really go in overdrive and find the right ideas to put in your portfolio because, there's a lot of money to be made, right? So home building was not necessarily, we did not necessarily have to be in that position, Bhavan. We could have planned this out months ahead, right? But it's just lack of preparation that led us to have to do like a crunch session and find a few companies to be short going into earnings. Not ideal, but we have to do what we have to do sometimes. So home builders are not doing well at all. There are many reasons that we've discussed in the Discord server. Interest rates interest rates staying higher than for longer than expected is one big reason. We're also seeing a lot of inventory with major home builders. So companies like Toll Brothers, DR Hortons, and a few others that we've mentioned in the Discord server. It's not difficult, right? For the guys who are new here, we just find one of these companies, right? DR Horton. And that's why, Coifin makes your life so much easier, right? Like the subscription that we pay on Coifin, we make that back in like a tenth of a trade, right? Look at this. So this is telling you what inventory is for that particular company, and it's at the highest ever, right? So maybe this is like you know, an outlier. Let's find a different one. Yeah, Toll Brothers, another massive home building company. So for those who don't know, you go into financial analysis, profitability, and then eventually look for days outstanding inventory. So it's not the highest that it's been historically, but it's not the lowest as well. If you look at another one, let's take MHO. So Toll Brothers is not the biggest, right? I think DR Hortons is the biggest. Um, There's a name I'm forgetting. I'm trying to remember it.
Lenin or something?
Yeah. Exactly. So another case where inventory is relatively high, right? Um, Leonard, right? That I think that this was the one which reported this week. Oh no. This hasn't reported yet. Inventory is coming down, Yeah, interesting. So this is like 32 billion. We can also look at KBH. So you're not going to short the company just because inventory is high, right? You always have to build a picture about the industry and what do these high inventory numbers mean. So quite a few of them, we can see that they still have relatively high inventory numbers. And what does that mean? They are likely to either start discounting houses, so margin compression for these companies, or if they decide to keep the prices, the velocity of sales will decrease significantly, especially as mortgage rates are not coming down, right? So if they decide to maintain price, which is called price discipline, as sales velocity comes down, maybe they manage to keep margins, their revenues come down, but margins stay the same or even increase. So EPS is not necessarily that affected. But then someone needs to take the pain, right? Who's going to take the pain? If you have high inventory, you're not going to go out and build new houses or as many new houses. So the guys who are building, who are bringing building materials to these home builders will not have as much orders as they had in the past. Is that clear? So as an example, a company that we are short, Simpson's Manufacturing. So these guys, they predominantly, if you look at the description here, they predominantly sell structural solutions for wood, concrete, and steel connections. So this is a company that's, its fate is tied to new builds. And if companies have high inventory and they are not going to be building as many houses in the future, how can this company's numbers, keep growing? If you look at analyst expectations, they've put 4% increase in sales and then 8% increase in EPS, right? 4% here, 4% here. So this looks like a convenient number to me, right? It's not a number that has any relevance, and these numbers could easily be chopped by another 10-15% if the orders are not coming through. So you can see why I'm short this company, right? There's a lot of room for downside here. And if you look at how it's been trading, so right, it's not necessarily like a very bullish action, right? So the company, this is on a weekly basis. Let me just get the daily chart, right? So for a number of weeks or months, it's basically been stuck in a range, right? And if you look at the last few days, um, again, stuck in a range, and I think it's just probably gonna touch or attempt to go back to 155 and then possibly go even lower. So I think we probably shorted it somewhere here, right? Around 168, maybe. It's now at 165, and we have earnings next week. So keep an eye on this. I think it's going to be another explosive situation. So, this is basically how we form a view on a fundamental view on an industry, and then we go find companies that could have meaningful upside or downside based on what we are seeing. I know a few of you have said that options liquidity is not the best for this company. It's certainly true, but what can you do, right? You have to make something out of the situation. So when you go into these types of situations where the option chains are not that generous, it doesn't mean you cannot participate. You can still participate, right? But you have to do it slightly differently to what you would do on a large cap or mega cap, right? Just to give you perspective, like I've got a large position in this short. So I'm definitely not backing off because, the option chains are not very generous and all of this. The reason I have this short on is because I see meaningful downside. And if the scenario that I think could happen unfolds, uh, it doesn't really matter whether options liquidity is high, low, or whatever, right? Um, if the spot price goes down, the option price has to follow. And you will, at the end of the day, you only care as to whether you have good risk reward, right? And if you structure the trade accordingly, uh, it's not a difficult trade to do. Any questions on this? Not really. Okay. So, yeah. So I wanted to discuss, what I wanted to discuss was also, we've also seen gold staying very like near all-time highs, right? And with that, gold miners have kept rallying. So that's a very interesting. It's very interesting, right? Because normally gold moves ahead of inflation because gold is an inflation hedge, right? If you were to plot inflation versus the gold price movement, you'll see that the gold price can be a good predictor of future inflation because people are starting to buy gold in anticipation of inflation being high in the future. Gold is also an indicator for geopolitical tensions or potential stress in the financial system. And gold being gold rallying, for so long. If you look at the chart of gold here, you can see, right? It's been rallying from December onwards, just like in a straight line. So, it's hard to ignore this. And I think the main reason behind this is because of future expectations of inflation. So anyone who's writing a blog, news article saying that inflation has been conquered or that we'll even see disinflation ahead in the next few months, I think they need their head checked because that's clearly not what the market is telling you. And I say this because I received a blog post this week where the guy was basically saying that he's starting to move into bonds because he thinks that we're gonna see deflation in from here. And I was like, okay, well, good luck. um, and it's crazy because these types of analysis come from supposedly people who've been investment officers at major, hedge funds and so on. uh, it's mind-boggling, sometimes it's mind-boggling the kind of crap that people do with other people's money because it's not their own money, right? They take investors' money and then they gamble it on all these different themes that they think about. When the market is screaming inflation, they are going and buying bonds. That's like it's almost like sabotage, to be honest. But anyway, it's not my money, not my problem. um, do we have any questions here? Not really. We've all been very silent. So maybe what I should do is let's get started with the ISM reports. I'm gonna shut up from here and then basically ask you to share your views with me. So I'm sure you would have seen the ISM report, right? So can you maybe unmute and give me your own views on what you think about the ISM manufacturing? No one? Okay, no problem. So um, you can see the Discord server now, right?
Yes.
So, for a number of months, we've been seeing the ISM in contractionary territory, especially, as an index. And for those who are new, if the number is above 50, that indicates expansion. If it's below 50, it's indicative of contraction, right? So for a number of months, we've seen the ISM being below 50, but we had been seeing the new orders recovering, right? So if you see here, the new orders had been positive. I think we could even look at this on a chart. With these things, Google is your best friend. No, this is not what I wanted. Anyway, let's make life simple. Let's go to these guys normally have, yeah. I need the manufacturing one. Yeah. So this is the manufacturing index, right? If you see for a number of months, right, we've been below 50. So we've been almost the whole of 2024 has been in contractionary territory for the ISM manufacturing. And now we're starting to break out from that. This is a major trend, right? It's a major reversal of this contraction phase that we had been in. But most importantly, if we look at this only got above 50 in January, right? So this is the first month where we are seeing the ISM in expansion territory. If we look at I want to see the new orders. This is the one, yeah? Okay. So if we look at the new orders, look at this. It had already predicted that the ISM will be in expansionary territory from November onwards. Is that making sense? So let's go back to what we discussed, right? The new orders index is the leading indicator for the ISM index itself. Because let's pretend you're running a business. Once you get a new order, then you start buying inventory, then you start employing people, then you manufacture the goods or services, and then you deliver it, right? So new orders is the start of the whole manufacturing chain. Make sense? So it it wasn't a surprise when January came out in expansionary territory because the new orders segment had already been telling you that there was a lot going under the hood in the US manufacturing segment. I'd like you to unmute and participate a bit here because I really want to make sure that you're understanding these concepts. This is like gravity for financial markets, right? Because at the end of the day, this predicts US GDP or US GDP growth. So if you do not understand this, then you're not understanding anything in terms of how all of these build up into US GDP growth. Okay, so can I maybe ask a few of you to kind of share your views on what I've just discussed, whether that makes sense, if you've got any questions?
Roshan,
Mhm.
you sorry, someone also want to go.
Go ahead, Robert. Go ahead.
Yeah, you mentioned that in the new orders being a leading indicator for ISM's PMI itself,
Yep.
and how the new orders have been predicting an expansion in last
Mm-hmm.
print for
Mm-hmm.
ISM. And new orders is still on an expansion territory this month. So is it like a confirmation
Yeah,
that this trend is in fact
yep,
real and something is happening?
yep. I mean, this is like if you were waiting for confirmation signals, this is it.
Okay.
So when you see me writing in the Discord server about the manufacturing reshoring theme getting even stronger and all of this, it's not coming from thin air, right? This is basically what's informing my view and judgment on those topics. I mean, especially for you, Bhavan, because you've been involved quite a bit, right? This is kind of light bulb moment for you, right? When you see uh, this graph just inflecting, yeah, because this is a major
Yeah.
turning point here,
Yeah.
and then from here onwards, it's just going on a tear.
Yeah. It's a
Yeah.
quite substantial, meaningful
Yeah,
increase
yeah, yeah,
on the
yeah. I
order.
mean, this is groundbreaking. It's not like just, oh, yeah, just a simple development, right? This is what will guide a lot of decisions that you'll make for your portfolio in the next 3, 6 months. So also when
One
I
question,
when I'm
one
talking
question,
about
Roshan.
uh, just let me complete before I forget my trail of thought. So also when I'm talking about capital rotation from tech into value, low PE industrials, old economy stocks. Can you see why that makes sense?
Yeah.
Yeah. Yeah. So go ahead. What were you saying?
Uh, just to connect like a couple of dots.
Mm-hmm.
So you mentioned that inflation is also on an uptrend,
Yeah.
and at the same time, the manufacturing index is also going up.
Yeah.
Can can there be a scenario where inflation is up, but at the same time, manufacturing
Yeah,
activity
of
is
course.
also high?
Actually, inflation will be up because manufacturing is going much higher. Let's think about this, right? Let's say everyone is setting up factories, and now everyone needs steel to build factories. Everyone is buying factory equipment. This is going to push the price of raw materials like steel, factory equipment, labor, and everything higher. Yeah. What creates inflation? It's an excess of demand, right?
Yeah.
So that's a very good point. I was coming to that. But aside from that, right, the reason I'm kind of belaboring the point here is because if you get this right now, you're gonna make a lot of money in the next 3 months, and you can see why, right? The 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 market is already paying attention to this. You might think that the market is not paying attention to this, but guys like myself are looking at this from November onwards and just basically waiting to pull the trigger. Um, the reason in the Discord server we've gone into this discussion over here, right? Where was it? Yeah, industrial machinery. There's a reason why we start changing the lens and we start looking at other things in the economy, right? Because capital will be rotating in those companies or in those sectors as the results come through. The smart capital will be moving now, then the dumb passive money will come later when the results are here and in a newspaper. Yeah. So when we talk of inflation, this is what I wanted to show you. So this is the ISM prices, right? If it's above 50, it means expanding. So prices are going higher. If it's below 50, it means contraction. So one of the things to note here is the ISM manufacturing respondents. These are purchasing managers of the top 500 manufacturing companies in the US. So you're basically asking the head of procurement whether he's paying higher prices for his raw materials or not. Is that clear? So everyone in the manufacturing industry, and these are the top companies, they are telling you whether compared to last month, they are paying higher prices for their raw materials. If the raw material prices are going up, what do you think will happen to actual retail prices 3 to 6 months later as the finished products are on the market? They'll just pass that on to the consumers, right? So the Fed is looking at, let's say, PCE or CPI as a measure of inflation. But what's going to predict inflation? What is the leading indicator of inflation? One of them is this index, right? And as we can see for the last few months, it's been consistently above 50, right? So when I'm saying that we might have a reinflation theme in the next 3 to 6 months, this is basically what I'm basing myself on. Okay. So anyone else wants to chip in? Have we understood the importance of these indices?
Mr. Roshan,
Yeah.
I have a question if you can
Yeah,
answer.
go ahead. Go ahead.
As you talking about the ISM PMI,
Mm-hmm.
but this data is from January, and that time there are there's a lot of order coming for the future because nobody know what the next reaction of Fed would be.
Mm-hmm.
But now it is not decreasing the interest rate.
Yeah.
Because company are that time that and thinking that maybe Fed decrease the interest rates and they borrow more money and they will invest in more manufacture and send it to the market. This is the one question. And what would be the February about the February?
So
Is it we are looking? Are we are seeing another increase in PMI manufacturing from the February?
mm,
And the other thing now, the situation is changed. Now there are the threats on the Mexico, Canada, and China. Because whatever they manufacture, some of the product will be sent to the outside of the USD. They will export.
yeah.
Is this
So
also impact on the next coming PMI and next inflation and employment and production?
yeah,
and
I get you. I get your question. So whether the Fed was going to cut or not was made very clear in December itself. I think it was it was probably probably mid of December, right? So all the uncertainty around where interest rates are going was clarified by the Fed in mid-December, right? So anyone who's now deploying capital or ordering more and all knows that the Fed is going to keep interest rates higher for longer, right? They're not under the misconception that the Fed is going to cut and that's why they are spending ahead of time. That's the first note. Secondly, of course, the tariffs add a lot of uncertainty for many industries, but the tariff was also announced even before Trump became president. Of course, as he's become president, we've gotten more clarity and so on. But it's not news, right? All these companies know firsthand that tariffs are coming. And there's no situation possible where Trump has not already discussed this with the top industrial leaders because he would not go ahead if he did not have their backing. That's something that we have to be very aware of. Yeah. And now coming into the discussion of tariffs, is this good or bad for the manufacturing industry? It's a mix of the two, right? But think about it this way: if a large part of foreign manufacturing is coming to the US, that's extremely stimulative for US manufacturing, right? All the things you're manufacturing in China, if you're now going to bring that to the US, you need new factories, new machinery, you need more logistics, more warehousing, and all of this. I think this is what we're seeing. The reshoring theme is taking shape much quicker than what everyone thought. And people are trying to find solutions to all these tariff situations. There are many companies that have chosen to just renegotiate with their Chinese suppliers. Many of them are canceling contracts and bringing or sourcing more locally. I'll give you an example. So a lot of textile was being manufactured outside of the US in places like China and so on. And for US businesses, it's a big headache because, first of all, they don't have flexibility. They have to wait for a number of weeks to get their shipment. And there's always a big language barrier. Now they are sourcing from the US. Do you realize how much more easier that makes their lives? They can speak the same language. They can innovate together. The waiting time for the shipment is not that much. They can even, get a few samples in between within a couple of days. And the cost difference is probably not that much because, of course, when we are reshoring, we're not basically setting up factories with high cost bases, right? These factories are trying to innovate and become as lean as possible because they still have to be competitive, right? And I know a lot of businesses who are telling me that it's so much nicer to work with people in the US. It's so much better for the business. There's less risk around freight cost and all of this, and they don't mind sourcing from the US. Actually, they prefer it this way, and this trend is probably just gonna become much stronger. And if you look at the amount of imports from the US, there's quite a few. Yeah, possibly, Cheyenne. That's a good point that you've raised. So if you look at yeah, the potential for people to move back to sourcing from the US, that in itself is a massive trend. So, it's not about predicting the February PMI and all, because otherwise, if we could predict it, why would we sit and wait for the report, right? It's about understanding what's happening on the ground and not just looking at one report and thinking that this is the holy grail either. We need to keep doing our research under the hood and understand what businesses are actually doing. If you stand in between of these kind of steamroller moves, if you argue with these, there's not a chance in hell you make money. That's something I can tell you from experience. When the market is speaking, you have to learn how to listen. And yeah, I'm not gonna belabor the point. I think I've spoken about this quite comprehensively now. So there's a reason why in the Discord server I started to ask you to look at this company. It's called Kornit, ticker symbol KRNT. So these guys basically they manufacture these machines that allow you to print custom T-shirts, right? So these machines can be used on an industrial scale, but also for these companies that offer you print-on-demand T-shirts and custom T-shirts and so on. So these companies would have, let's say, one of these printers, but also this is used at an industrial scale level too. So if we're seeing increases in demand for these types of equipment, Conit is like a 1 billion market cap company. I think that's what I remember from looking at it before. Yeah, so Conit is like 1.338 billion, right? Earnings are in 3 days, so I'm not asking you to go buy it now, but start doing your research, right? There's a lot of room for companies like this to double or even, go much higher in the space of 1 year. That's what we need to be focused on, right? we need to understand what's happening to their businesses and whether they're going to be seeing an inflection in demand from here. Because this company is still loss making, if I remember. If we look here, so expectations are for it to grow sales by 11% and 12% next year. But I think it can do much better here, given what we're seeing. So there's material room for upgrade in these numbers. And then on an earnings, yeah, it's profitable. Yeah, not profitable on a gap basis, but you can see, right? It's narrowing the gap. Not no pun intended, right? I think if revenue inflects and we get maybe 10-15% increase, that can easily be above zero, and the market will start paying a lot of attention to these types of situations. So I'm not saying just go buy it blindly. I'm saying these are the type of things you need to be thinking about and doing your homework and see whether that's a buy or not. Are we clear? Okay.
Yeah.
And again, I would like us to participate a bit more, because the quieter you stay, the less you're understanding. As bluntly as I can put it, if you just stay quiet behind your mic, you're understanding nothing. It's no better than just watching yet another YouTube video. And the reason I'm also, focusing a lot more on ISM is because after months of doing this, I'm still not getting a good sense that we are understanding these reports and being able to generate high quality ideas from there, right? A lot of the ideas that we've discussed in the Discord server, I think 99% of them are sourced by me. And then we basically just agree. So that's not a great situation to be in. You have to be able to work independently and come with your own ideas. Yeah. I can only tell you the truth, right? Because the markets will punish you if you don't pitch up and you don't do your work correctly. It's not an industry where sugarcoating or patting oneself on the shoulders does any favor. The only way is to evolve and to learn how to do this properly. Okay, so um, let's look at this now. This is the ISM new orders. So again, I'd encourage you to unmute and just give me your views on this. What are you seeing? How are you reading this? Would you like me to switch to a different index, as in production, because you want to see both of them together?
Hey, hi, Roshan. Looking at this ISM report, especially for new orders, I think what strike me the most is textile
Yeah.
mills. I think there's a lot of potential there. But however, I think we need to be careful at the same time because of the backdrop currently. Like it's not going into the market and just long all textile manufacturing. I guess
Yeah,
with inflation inside.
anyone who does this, it's like I don't know, it's gonna be an expensive hobby.
That's right. So
Yeah.
with inflation inside, I think we need to be looking for companies with good pricing power, be
Yeah.
able to pass on the costs to the consumers.
Yeah.
Uh, and one company that comes in mind is Nike. I think
As a long or
uh,
short?
I'm thinking as a long
Okay, interesting.
from here,
Mm.
um, because
But
I know.
Nike is not textile mills, eh? Nike is part of apparel, leather, and allied products,
Mhm.
and
So
consumer discretionary retail. That's the kind of company.
right. So
Textile
w-
mills are slightly different. It's like one step ahead in the value chain.
right. So in terms of like, let's say that perspective,
Mhm.
do you think like, let's say Nike or even like, associated companies would benefit from it?
Um, I'm not that positive on Nike.
Yep.
I think it's a little bit of a Starbucks situation where coffee, they start selling coffee at like, I don't know what's the price of coffee, $20, $30 or whatever. And you have worse consumer experience. It's a company that just rests on its laurels, tries to pass cost indefinitely to its consumers, and then people are like, for this price, for this high-priced coffee, no, it's fine. I don't wanna, I don't want it, right? Same thing for Nike, right? If you look at the prices of the shoes, it's creating that at that price point, it's opening the room for many other substitutes. So if you look at the industry, many other unknown brands are now taking market share from Nike. Yeah. I mean, even for me, right? I try to run quite often. Yeah. So I've stopped using Nike running shoes. Not because it's expensive, but because at that price point, I could buy like specialist running shoes, maybe a little bit more expensive, but it's putting me into that dilemma where I'm like, yeah, why would I not pay an extra $50 and get like a proper custom made specialist shoe for me? You see what I mean?
Mhm.
And then it's like their t-shirts, apparel, and everything. It's like there's nothing that differentiates them from all these other brands. So these guys have priced themselves in the sky, and now they are just bleeding market share.
Mhm.
I would not probably look at it as a long unless you've got very specific reasons why you would. Just going back to the textile mill story too. We also have to be objective, right? Look at the new orders. So you wouldn't say 2024 was like a year of expansion. I think there's only
Mhm.
1 month where we saw expansion, which was in November. Yeah.
Yeah.
So it's too big. Yeah.
So you could
Uh,
consider it as a one-off. But I didn't want to
no, no, no.
consider
So
consider
what
it as
I'm
a
what
one-off
I'm
because
also
it was
saying
nine.
is,
Mhm.
the exuberance that we're all feeling in the group about textile mills, we have to caution against that because this is the first month after after like a very negative trend. This is
Mhm.
the first month of expansion. So sure, you can extrapolate and think that there's something happening in the background, but it could just be one good month. And then for the next 6 months, it goes back to being negative. What I'm saying is, when you see these things, you have to go into the industry and understand what could potentially be driving that. I know what's driving it. The reason I'm asking you to look at Cornet is specifically because of that.
Mhm. So I guess you'd want to play it more laterally, like the
Yeah.
industrial machinery,
Yeah, I don't want
provided
to
these
play
textile
it. I
mills.
don't want to
Yeah.
play it by buying a textile mill and buying the same old traditional
Mhm.
crap, right? With all the issues that they've got. I want a company where, if that trend keeps strengthening, the increase in demand will make the stock explode,
Mhm.
right? And it's a company that is, is using technology, is not gonna be on the receiving end of increasing cost and so on, right? So we have
Mhm.
operational leverage. That's the kind of situation I'm looking for. I'm not looking for your traditional, boring textile mill dying or whatever nonsense. Because there's a very good reason why these companies don't make investors money. Yeah?
Mhm. And the thing that caught my attention as well, I know these numbers are or relatively speaking, but it is
Mhm.
currently at 9.
Yep.
So it seems that, it is in like, like growing significantly relatively to the different industries here.
Which one are we talking about?
Textile mills.
Yeah, I mean, look, I would not read much into that. Yeah. It could also be seasonal.
Mhm.
Yeah. Um, but yeah, I mean, textile is one idea in your portfolio, right? And then we have
Yeah,
9 other spots open.
that's right.
So
That's right. That's
so
right.
let's look at other things, yeah? Actually, let's stop on let's pause on textile mills itself. Let's look at what's happening in production. So,
Roshan, can I talk about another industry from that list? I guess I was looking at the primary metals bit,
mhm,
and of
yeah,
course that seems to have an uptick going on. And I was thinking of copper primarily,
yeah,
since copper is a good indicator of economic growth as well. I mean,
mhm,
the copper price particularly,
yeah,
and also I guess the electrical equipment's sector seems to be on a slight uptick as well.
yeah.
Um, I'm guessing you wouldn't think that miners like copper miners or primary metal mining companies to be. I mean, I'm
You
guessing
look, as a trade,
prices.
you can still put it. You can still put it on company like FCX, for instance. Um, but I would not want to expose myself to the copper price only. Yeah.
Mhm.
I think in the US, we're seeing this whole electrification theme. It definitely bodes well for copper price, right? But there is a more clever way to get exposed to that theme, right? There are many companies, like you've rightly mentioned, in the electrical components field that if we do our research, these are companies you would never have heard about, right? They're not things that, they're not like house brands, right? But there's a lot of things, there's a lot of dynamics improving within the industries. Companies that manufacture generators and so on. I think I did share something in the Discord server, right? It probably was for the guys in the workshop. Let me just find it quickly. Uh, yeah, give me 1 second. What is this? That's the one, yeah. So yeah, this is the one I wanted to show you. Look at this company.
Mhm.
Could you make money in this stock? Power Solutions International. You've ever heard that being discussed at the dinner table? um, so what do these guys do? They design, manufacture, trade of power systems in electrical power generation equipment. Yeah. So they work predominantly with an industrial base. In the US, they have issues with electricity generation in that they need extra capacity with all this AI that's coming up, right? But
Mhm.
aside from AI, there are traditional industries that are running, right, and growing and needing more energy. So they are not currently able to just cater for this extra demand using the grid, right? And sometimes what also happens is these industries are in remote places, right? These factories. Maybe let's take an example, right? If you have a copper mine or like aluminum mine or something, sometimes what happens is they prefer to use generators as opposed to, getting the whole grid system all the way out to those remote locations. And then you have companies that manufacture these solutions like PSIX. Yeah. So the reason I'm discussing this early in the year is because this is like almost like 1 billion market cap. So this could be double or trebled from here by the end of the year if things go well for this company. At 1 billion market cap, not a lot of funds are paying attention. So this would still be predominantly retail people trading it. A bit of like the small cap funds also owning it. But if you do your work on this, and you decide maybe it can go up by 50% from here by the end of the year, that's fantastic upside, right? Then you just buy shares, you buy it at 40, you sell it at 60, 70 by the end of the year. That's a good return, right? You don't always need to take whatever I'm discussing and, structure it with an options trade and all. The trends that we're discussing about can be expressed in many different ways. Make sense?
Yeah, makes sense. Yes, thanks.
So, a lot of times, and this is natural, right? It's not me criticizing beginners. I probably used to be like this too decades ago, right? Like a decade ago, not decades ago. A lot of discussions on theories, on, what could happen, what would not happen, and all. Very little discussions on which are the companies involved in this trend. What are the names? Can I list 5 names and do like a bit of research around them and just get a gist of what they do and what are the tailwinds they're exposed to? I think I've said this before to Bhavan, I think, right? In the US, these are the best management in the world, right? Every quarter they sit with you, they give you information about the industries, and yet you don't want to know. You just want to read like what a guy at Bloomberg is writing on a blog. If you wanted to really know and get down to the truth, you should be looking for these companies and going into the earnings call transcripts, because that's the best of the management in the world, giving you the most accurate information on sector challenges, sector tailwinds, headwinds, and helping you to form your view on the industry. But as beginners, I think what happens is people find it difficult to commit to the research process because they don't know what they will end up with, right? We're all time constraints, and we're like, if I look at these 5 companies, I definitely need to find one big winner within that list. And it's not reasonable to have that expectation. Yeah. That's why I always say you should go into the research process just being a kid who wants to know more, right? You're just poking around, you want to learn more about the industry, and that's the reason why you're doing the research. Not to get a phenomenal trade that you can tweet about or bore your neighbors about all day. No. You're doing it purely, for research purposes. And all this information is freely and publicly available. It's just a matter of you typing in the right thing on Google, clicking on a few links, and deciding to sit there and read the information. It's as simple as that, right? And again, sometimes I have to take my own medicine, right? A lot of times what will happen, and I'm sure this happens to you too, you've got like a YouTube tab open, you're listening to a song or a video, and then you're getting notifications from WhatsApp, you're in touch with the whole world, and this process that should take you half an hour to just read and form a view on a company is taking you hours just because you're distracted and your brain is just scattered all over the place. And I would not be surprised if you're raising your hand and you're saying, yeah, that's me too, because it happens to me, right? We've got a million tabs open. You've got WhatsApp, you've got Facebook, Instagram. Someone wants to send you the best reel, the most funny reel ever. The whole world is competing for your attention, and time is just elapsing, and you're doing nothing in terms of actual work, right? And that's why you'll see in the Discord server, I'm trying to make your life as easy as possible by just giving you these candidates that would make you so much money over 2025. And all I need you to do is just to take these tickers, type it in Google and do some work, form a view on these companies, and then just make money. It's as simple as that. Have I made my point?
Yeah, definitely. I appreciate that, Rosha. Thank you.
Look, I'm being a bit sarcastic too here because this is actually
No,
what prevents us from getting over the line a lot of times. We pretend we are busy,
yeah.
but then what are we busy with? YouTube, WhatsApp, talking shit to people who don't matter, right? People who are not making any contribution in our journey. We're just exchanging reels and wasting time on that basis. It's giving us entertainment, pleasure, dopamine, right? That's why we engage in that. But we have to be self-regulating sometimes because like we're all young guys here, right? We've got, let's say, another 30, 40 years of doing this properly with our careers. And if you just commit to this and you're a little bit strict on your own way of working, especially as you guys are time constrained, right? The your financial curve will just inflect significantly from here over for the next 30, 40, 50 years. By just making a very conscious decision, I want to research one company per day or 3 companies per week, whatever that number is, just stick to it and just do the research process. Like when you were at school, right? We were all such good students, working on things that made zero difference to our lives, but yet we would work on it so passionately, right? And now you've got something that you can see, you can smell the money, you can smell how transformative it will be for your life, and yet we don't commit to it, right? This is the Wi-Fi generation. This is me, including me, right? This is the problem with the Wi-Fi generation. Too distracted.
Yeah, agreed.
Back in the days, we used to read one book, and that one book would transform our lives, our mental processes, the way we see things, the way we talk, argue, and all. Now we've got unlimited books, but we barely read. Yeah? Like, I'm sure a lot of you are nodding, right? You were probably 10 times more intelligent, more hardworking, more motivated, stimulated, or whatever when you were without Wi-Fi and you would go to the library, make notes and all, compared to now where you've got access to the whole world for free and you choose to not take advantage of it. Sorry for my rant, but I know this is gonna make a big difference for many of you. Okay, we've strayed a bit. Let's come back to this. Okay, do we have any questions before I get into this? So some of you who are familiar with the ISM, I want you to unmute now and tell me, when you look at the production indices, what actually, how do you interpret that? We've looked at new orders, but when you look at production, how do you interpret these numbers? What does it mean for you? Production, new orders?
For me, I'd say production is more like products that are going out of a factory into the market.
Yeah, not necessarily out into the market because they might produce something, put it in inventory, and it takes a few days to go to market. But you're right, production is what's happening now, right? So basically, when you're asking the guy this question, he's walking a few steps back, looking at the factory, and then answering the question, right? So this is like reflective of what quarterly revenues would be for this quarter. Yeah.
Yeah.
And then new orders is basically what would production be like in the future? Which basically
Yes.
means what would these financial figures be in the future for the next 3 to 6 months? Yeah.
Yeah.
It's very important to get the mental model correct here, because otherwise, great ideas come from marrying the two. Yeah.
Yeah.
Okay. So Hans, as you're unmuted, maybe share your views on what you're saying here. Let's focus on the textile mill for now, because we've looked at new orders. Let's look at production for textile mills now.
Mhm. So production has been up for
3 months. Yeah.
3 months. Yeah. There
Yeah.
was one month where it gone up and then it went back down.
Yeah. It's quite
And
an
then
unusual one, right? Where
yes, it's
production is relatively high as new orders have not necessarily been strong. So you see my reluctance with being overly enthusiastic about this one number now, right?
yes.
But nonetheless, right, I still believe there are good longs to find in this particular industry. But I just want to make sure you understand things properly, so you also understand the risk involved in being wrong by just looking at one number here. Go ahead, Bhavan. I
Mhm.
think you wanted to say something.
Yes, Roshan, like for textile mill, the new order had been up in November and again in January, but they had a downside in December. What's stopping you from saying the December print is a bit wrong, or like not right? And uh, and if it's being positive, that means 3 months of positive new orders print for
Um,
textile mills.
no. I'm,
And
I'm not saying 3 months of positive. It's the reason I say 3 months is because we get quarterly financial figures, right? So that's the link I'm making, right? But in terms of the report itself, this comes on a month-to-month basis, so that's not gonna link to that. So when I
yeah,
look at the textile mills, typically what I would say is we take note of this, and then we wait for another confirmation signal for next month, right?
yeah. No, my question is like, why can the December print be somehow wrong, like in terms of
Um, it
new
wouldn't
order?
be wrong. I think um, you know, these are basically survey respondents, right? It's an average of how everyone is feeling. So it's also something that's fairly seasonal, right? Um, and normally when we have like if we're coming from significant weakness, people don't one day to the other become optimistic, right?
Yeah,
So what could happen here is we have been contracting for so long. In November we see a bit of inflection, but then in December we don't see the same kind of inflection, and people are thinking that we it's still a continuation of the past, right? And then in January we see inflection again. So that's why I'm saying because even if you look at any share price, right, when the lows are hit, it doesn't go back up right away, right? It makes a new high and then it comes back down, tests the lows again, and then eventually it goes up. Do you see my point?
I see the point.
Yeah. So that's the reason why I'm saying let's not be overly enthusiastic on this, but this is a big sign for us to start doing our work on some companies that are involved in that space. Because if we see February being positive as well, then I think it's a clear signal to start deploying capital. The reason I'm a bit more bullish is because I know from other sources as to what's happening on the ground, right? And that's causing me to take the information I have on my end, marry it with the ISM new orders, and I've already seen February, if you can put it that way, right? I've already seen February all the way to, maybe 6 months from here. And that's on the basis of what I know has been happening on the ground. But I could be wrong, right? I'm basically just accumulating snippets of information and trying to put them all together, and then finding a company that is exposed to that type of tailwind. Make sense?
Yeah.
The other thing I did not really like was if you look at apparel, 3 months of neutral, so neither contraction nor expansion. I would think textile and apparel are very closely linked. Yeah? So we have to also take that into consideration. We're not getting like a green signal and just, all out, just go deploy capital. We basically take note of this, and then we figure out when is the right time and which are the right candidates to be long. Go ahead, Darren.
Yeah, I agree on this point. So this is why, I mentioned Nike and yeah, but I appreciate if you could share more. W- like why would you think that textile mills is up?
I think it's to do with the reshoring activity.
Hmm.
Just to give you a bit more insight, so I know a lot of e-commerce owners who were before ordering from China. So things like tablecloth, handkerchief, like very boring products. So they would order this from China. It's custom, it's kind of designed by them, and they place the order in China. Now they're taking all these orders and finding US manufacturers, right? And when I'm speaking of US manufacturers, I'm not talking of big factories. I'm talking of, entrepreneurs like myself who would say, actually, there might be a case here if the US puts tariffs on China. So these guys are going to pay 10, 15, 20% more for their garments. At the same time, they have to pay so much on cargo. So if I order this machine, this is my cost basis. So I can see a business case here, right? And then these guys, they are like maybe small firms, like 20, 50 people, but they're not operating like a typical traditional textile factory, right? They have figured out how to automate a large part of the process, how to niche down. Maybe they're not the guy who are going to produce your basic t-shirts, but they are the guys who want to produce custom made t-shirts. I was joking in the Discord server that we need custom polo shirts for the financial traders hub, for all the tickers that we've made massive wins on. So typically you cannot go to, like a large factory and say, okay, make me 10 t-shirts with this design. They'll say, no, minimum order is like 500, right? But as you get these big changes happening, right, with tariffs and also technology becoming so much better, then it's creating incentives for people to change the whole business model and start offering these types of solutions. So that's basically what that's the kind of intelligence I'm taking from other parts of my life and overlaying it on this type of information.
And it makes sense as well. I think Trump in itself is a theme. I think we need
Yeah,
to
yeah,
add it to
yeah,
the ISM report because he
yeah,
has so much say on the market and can change
yeah.
the direction in a like in a click.
Yep.
What I've seen happening in Canada as well is that due to the uncertainty, many companies are starting to fire workers or terminate workers because of the uncertainty in demand, especially in the
Yep.
steel industry. Or I think the same would be happening in US as well, because
Mm,
everything is forward looking, right? So
yeah, I
uh,
mean, look, what would happen is like Canada is on the receiving end of tariffs, right?
mhm,
The US is a big beneficiary of these tariffs because the guys who still want to operate the same way as before, they are going to be big losers. But the guys who take this as an opportunity to start sourcing locally, to start doing things differently with technology and so on, these guys are going to be massive winners, right? The it, it's across the board from steel industry to car manufacturing. So as an example, right? Let's say he is going to put tariffs on Mexico and Canada. I forgot the number, but it's like 70% or something of all cars sold in the US come from Mexico and Canada,
mhm,
right? Because that was the way the economy was set up in the past. They had agreements where GM would manufacture in Mexico, for instance. Another manufacturer would manufacture in Canada, which is just across the border, right? So Canada had like a big or has like a big auto manufacturing sector, right? And
yeah, mostly on the
it's
parts, auto parts, right?
yeah,
So I
yeah,
think this is what's driving the industry.
yeah.
But my question would be, how quick can the US bring this expertise over? Uh, let's say if they don't want to manufacture in Canada anymore.
Yeah.
So I think there would be a lag from
Um,
when
so
it stops
so
and then
so
start again.
one thing to note is the discussions happening in like amongst board of directors, the management. It's not happening on the basis of the headlines that's being printed today, right?
Mhm,
These guys know about this for many, many months. And at the end of the day, capitalism will be the force to be reckoned with, right? These guys know exactly what is happening now. They've already planned for it. And you'll start seeing they will start building factory in the US or finding other ways to solve the problem. It could be in the short term a problem for them, but believe me, they've already got a solution in mind. And for guys who are already producing in the US, that's a big tailwind. If it's let's say tariffs on China is a surprise to anyone, and now they're going to find new suppliers in the US, who's going to benefit? The suppliers in the US, right?
mhm,
It's very important to understand that the vast majority of products sold in the US are manufactured overseas. If you only get 0.1% of this that's reshored, that in itself is a massive change. And if you think about it, right, if you've got robotics in textile industry, doesn't matter if you plug it in China or if you plug it in the US, the cost basis
mhm,
is still the same, right?
right.
Think about it. So, that's a big change that's happening in the economy, and we all have to understand this. Um, Trump has been quite vocal about steel. He wants US steel companies to have an advantage. So he's going to do everything to make sure that, importing steel into the US is not incentivized. And like this, there are many other things that he's trying to, make sure that the US becomes the primary source for ordering. So the reason we're speaking this lengthily on this topic is because it matters a lot, especially in manufacturing. As we, I would highly recommend you probably, just Google manufacturing reshoring, uh, read some reports around this. It will give you a very good understanding of what this paradigm shift could create. The US has one big advantage over the rest of the world in that it's the cheapest in terms of energy. So the US produces its own energy and it produces it at the cheapest rate. So that's the biggest competitive advantage of the US. And then secondly, of course, it's got massive human capital. Like the most talented people are in the US, right? Working in tech research and all of these things. Okay, let's go back to this new order thing. Let's think of a few more ideas here. What do you guys think about the computer and electronics products? We were quite positive on this in November and December, right? So this looks like it's not like as strong a trend, right? We'll find out in February. Another other things that I would have hoped someone would have intervened on the chemical products because that's another theme that where we thought that there's a big negative trend unfolding, but now January seems to indicate differently. These are the things you have to take notice of, right? And that's the reason, why I want you guys to start talking about this report and not just reading on the Discord server and waiting for me to spoon feed ideas. Yeah.
Are you talking about the price action on Kronos or Tronox Holdings?
No, not yet. I
Okay.
haven't really looked at that. I mean, Tronox Holding is it's like a small segment of chemical products, right? Chemical products would be things like PPG, this the whole paint section, right? By the way, that could also be a big theme as the housing sector is slowing down, right? Some companies involved in paints and coatings have reported relatively okay numbers, but I think going into the future, it's the prospects are not great there. So for instance, if I move over to, let's say, Axalta Coating, so their earnings were positive from what I remember. Yeah. But you see on the revenue, right? It's like a small beat, like 4.6 million more than expected. They're managing costs very well. So we've seen this a lot with many companies where they start like experiencing a revenue growth decline or slowdown, right? They start managing costs and they try to become a lot more efficient. And that's basically what's happening with this company here. It's already starting to factor in that, it's going to be in a difficult environment. And I mean, I don't think it's a short at the moment, but there's potential downside here. And if you look at the price action, you can see, right? People are not very convinced of the bull case anymore. It's a stock that has rallied a lot, but now it's just coming to a halt. If we look at this company, this is one of the leading paint producers in the US. Again, right? The housing theme is just so strong. I don't think they can deviate from whatever's happening in housing. It's already been missing on revenue estimates, managing to keep costs in line, but I think there's big downside in this company. The reason it's still held up is because its business is predominantly in North America, right? So if you look at PPG, for instance, it has a bit of exposure to Europe and Asia, but this one is predominantly North America. And North America has been strong as a whole, but we always need to think about the future. And I think there's a bit of downside here. So if you're looking for shorts, I think this could easily go back to 350 and even below. But do your work fundamentally. Go figure out what's happening with the company. When we were discussing this in December, we were literally here, right? So this is the first wave of weakness. Maybe I should put it on a weekly basis. So this is the first wave of weakness. Now it's trying to consolidate here, and I think it will just go back. So eventually you would see this in around 290 or something. This is typical of stocks that are, putting in a high. So, don't be surprised if one day you wake up and you see this at 290 and you're scratching your head as to why you did not participate. The job of a trader is not to look at this and say, I will pull the trigger when it comes here. The job of a trader is to figure out that it's coming here and then pull the trigger. Yeah. So a lot of times, in the Discord server, you'll see me putting trades on when, the stock is not necessarily showing any weakness. So I think for SHW, I probably call the short somewhere here, right? So we were at 385 and it was almost like no one believed me. Now we're trading at 360, like this is the next equilibrium level. And soon we'll be back to 280. And you still will look at this and say, no, I'm not sure and all. At the end of the day, it's fundamental. If the fundamentals weaken, then the stock has to follow through. Any questions? Look at PPG. PPG is the best short in this, right? So I think PPG, I probably called it around here, right? 130. Now we're like 115. It's testing these support levels, and there's a very good chance it could go even lower. And this is like 26 billion. So you'll have all the options liquidity as you need to play and structure, be as cute as you want with the structures. Any questions here? No questions? Yeah, I just want to see one thing quickly. So when we said, yeah, so you will see, right? We started discussing on the 6th of December, and we were talking of PPG and SHW. So where were we on the 6th of December? Somewhere here, 125. In between, there was a lot of time for us to put the trade on and participate, especially going into earnings. I think there's still opportunity, but do your own work and figure out what could happen in this stock. So when you look at these situations, right, we called it here, and now it's like 115. If you look at, let's say this one, we called it somewhere here. Would you be surprised to see it back here or even below? I wouldn't be, If it goes back to 155, I think that in itself is like a 2x on my position. You have to look at things from that perspective. What else do you need to put the trade on, right? Let's go back to the ISM quickly. Just want to finish off on manufacturing and then maybe we quickly look at services. So, okay, someone's dropping a chat. On top of chemicals, could transportation equipment also prove to shift in trend? Yeah, that's basically what's been happening, right? If we look at transportation, it's put in one good month, and that's coming on the back of many months of weakness. So now, I mean, a few of us have been discussing in the Discord server as to whether that means that we're getting a resurgence in auto manufacturing. That's possible. We have to try and look at the companies that are involved in that value chain and see what they are reporting. There are many companies here. There are companies that manufacture powertrains and auto parts for major manufacturers and so on. So not very difficult to understand what's happening if you just pull up a few names and figure out what these companies are saying. Could be a bit premature to turn bullish on the sector, especially as transportation equipment is a sector that's heavily exposed to tariffs and so on. Of course, you might have a view whereby all the manufacturing in Mexico and Canada will eventually come to the US. So this should be hugely positive for US manufacturers. And you can start off your research from that basis. There's a lot to pick in this sector. You could go automobiles, you could go tractor manufacturers, truck manufacturers, and so many others. And in that same value chain, you've also got all the components manufacturers. So people who make the powertrain, all the other auto parts and so on. There's like many companies in this space. And also, this space is ripe for capital rotation. So if we get capital rotation from tech to old economy stocks, you can have meaningful upside, like 20, 30, 40, 50% in many of these names. So one of the names that both myself and Bhavan were looking at was, is it Allegro Microsystem? Is that the ALGM, right?
ALGM, yeah.
Yeah, Allegro Microsystems. So we were looking at this in December, I think, right? Somewhere here. If I'm not mistaken, you even wrote a thesis on this, right, Bhavan?
Yes.
Yeah,
I think we
so
concluded that
yeah.
US demand need to come back.
It would be good to just review this earnings. It was out on the 30th of Jan. So just see what they are saying here. Because if this sector is recovering, I think we could easily go back above 25 and beyond. I mean, looking at the stock reaction here, I don't think there's a lot of recovery happening, but you never know, right? So that would be one company to look at. You could also look at this one. So what does this company do? It manufactures, so it's basically air management, drivetrain, battery systems, e-propulsion. So it's got a lot of tailwinds to the EV sector, but not just in cars. It's also trucks and all these other segments. So you have to look into these companies, do your own research, and not just sit with like a list of trends and do nothing with them. Um, is that making sense?
Yeah.
Are you struggling to understand how to find these companies, right? Because I know about them, right? I know the whole value chain, but for you maybe it's new, right? So you need to figure out a way to find these names. Do you struggle with that? Is that something that you need help with? No one struggles with that. So does it beg the question as to why we don't see any research from the majority of the group?
No, Roshan, I had a
Yep, go
comment
ahead.
here, I guess. Like for me, when I look at the ISM and I go into that industry code,
Mm-hmm.
right, and I see a lot of different industries. Some of them where usually there's like smaller businesses and they're not listed companies.
Yeah.
And I can't quite remember, but there are like examples where I think of, hey, like we're looking at some industry or some company which is in a particular industry, but it's not within that industry code, but it's closely related,
Yeah, yeah, yeah.
and I think I have some difficulty
I
in
know
those
what you
kind of
mean.
moments, so
Yeah.
I feel like
Yeah, I know what you
figure
mean.
out.
Yeah. Like for example, Kornit is not going to be part of textile mills, right? It would be listed as maybe, let's see, it's listed as industrial machinery. Let's just quickly see, right? So if you were just going by industrial machinery, it doesn't tell you that this is a textile related stock. Yeah. But it's your job to know about these companies. So the more research you do, the more you will
Yeah.
realize, you would remember, oh yeah, 12 months ago I looked at this company. It creates these machines for textile factories. So maybe that's a good place to look at. It's not going to be served on a plate, unfortunately, or fortunately, right? So that's why the more research you do, the more your knowledge base is rich, the more chance you have at generating these ideas and, finding your way to the winners. But if you don't even do step zero, there's no chance, right? Especially, the beginning mindset where you think, okay, I'm spending 2 hours to look into 5 companies. I need to get something out of this. I need to make money on this piece of research. That attitude, you'll have no chance. Because
Do you have
go ahead.
Sorry, I was just asking if you have any suggestions for. I know we've spoken about the Finviz screener,
Yeah.
but do you have any other, I guess, tips on like maybe screener where you can enter like keyword and potentially like find a company with which is somewhat related to that,
Um, Google is a
or
good
just
one.
Google, I guess.
Um,
Mm-hmm.
I'm not being sarcastic, but Google truly is a
Yeah.
good one. Like you remember when we had the California wildfires, right? So
Yeah.
I remember having looked at a company like 2, 3 years ago, but I just could not remember the name, right? So I basically said, what was it? I probably still have yeah, there it is, right? Fire. So I basically Googled fire extinguisher or sprinklers. I think that's probably what fire extinguisher sprinkler stocks listed in US. Yeah.
Mm.
Chances are some article will give you a few names, right? Uh, that is probably the link I looked at. Yeah, API Group is what is the company I was looking for because I had researched it a few years ago. And then it gives me a few other names. Some of them might not be listed, right? But Google will give you a very good idea. At least you'll be there 60%. And then you have to sometimes do a bit more work. That's one way. The other is when you go to Koifin, let's say you're researching Kornit, right? Or let's take an example of these auto manufacturers. Let's say you're researching BWA. So Koifin will give you a few other competitors here. So you can click in these, let's say Leah, right? We know it's another competitor. And then as you click on these competitors, you get more, right? So within this, you probably will get 80% of the list if you do it this way. Or what you could also do is you look at the company, and then you look at the industry, which is in this case automobile components, right? Then you go into watch list. No, that's not the way he did. Sorry. You go into screens, right? Then you create a new list from scratch. You basically add this industry, which was in this case automobile, right? Yeah. Let's say in this case you select automobile only. Then you do, maybe you say, okay, I want everything from 1 billion upwards. So that gives you 23 names.
Right.
Yeah. And then if you want, you can play
Interesting.
with the columns and add PEs and forward estimates and so on, right? So this is like the quick and dirty way to take like an industry trend and then narrow it down to, let's say, 5, 10, 15 companies involved in that space. Like in this case, maybe you don't want to look at anything below 5 billion. So that gives you a good list here. And then you can do the same on FinViz. Sometimes what you'll see is you find 1 or 2 companies that are not in this list, right? And then what you should do is just go into the company here. Then you just read the company profile description. That would tell you whether this is something that needs to be included or not. Make sense? And then if
Yeah,
you
that is
Yeah, and then if you think this is a company that should have been part of this list, you can add it in manually. Okay, this is, yeah. So I don't think you can add this in manually, but you can make a watch list of this, right? If you just say save as watch list, then in the watch list you can add things manually that you think might have been excluded. So you might say, okay, I'm going to use Koifin as my main research platform, but then I'm also going to augment the information with other things. Maybe it's from Google, maybe it's from FinViz. I'll give you one more, right? So BWA. So I'm on TradingView at the moment. Yeah. What you can also do is you see the ticker here, right? You can either click on producer manufacturing. This would be a bit more widely encompassing, but you can get a bit more specific and say, okay, I only want to look at truck or farm machinery. You click on this, then you'll get all these names here. Yeah. So these are like the quick and dirty ways to just create the universe that you think are exposed to that potential trend that you're seeing. Maybe this will take you half an hour because sometimes you have to look at the profile description and so on. But then once you've got the list, you put it in a watch list in Koifin. Let's just mimic it here, right? We create a watch list out of this. Automobile components. So that's my new watch list. Then over here, I'm gonna go and add a few columns. So let's say I want to do forward PE. No, we just need to do PE. Yeah, so price earnings. And then you select, let's say, next 12 months. So that's basically your forward PE. And then you can do estimates. Yeah, you can do sales, right? So next 12 months. Yeah, so basically, and you can do the same for EPS as well, right? So very quickly, you've got a wide view of the industry or companies that are exposed to the trend that you're looking at. And now you can start playing with, you sort it by market cap and you look at the forward P and try to understand why a company is trading at a premium or a discount to the sector. For instance, this company here, trading at 120 times PE, it's 2 billion market cap. So that we need to ask a few questions, right? Like, why is that company trading at such a high PE? Is it warranted or not? And at the end of the day, we'll probably narrow this list to 5, 10 companies, which we will do more in-depth research. Yeah.
That is very helpful. Thank you so much.
Yeah, I mean, look, I don't know.
Not-
I don't know if maybe in the next session we have to pick a theme and then just go down this process, because I suppose this will help guys a lot, right, in refining their own workflows and understanding what's required and also what's not required. Because if that's becoming a stumbling block in you walking the path, then it's my job to take it away and just show you how it's done, right?
Yeah, and this is amazing. I had no clue that I could do all these
Yeah, see, this
things
is
on
this is
Kotlin.
this is kind of the benefit of living on these platforms, right? I use Kotlin a lot, right? Everything I do is on Kotlin, and you will see a lot of screenshots from Kotlin, and it's just because it's a very efficient platform to bring all the information in one place. Yeah.
Mhm.
Um,
Yeah.
Bhavan, I know you're quite passionate about this segment, so maybe we should take a screenshot of this, share it in the Discord server, and then maybe you can pick a few companies from there and research them. I'll give you another example, right? Like for the auto segment, you have companies that are involved in the body structure of cars and trucks and all these automobiles, but you also have companies that predominantly manufacture sensors like lidar sensors, and these are increasingly being used in self-driving cars and all of that. So the classification of the stocks will not bring in these companies in this list. Yeah. So you see what I mean, right? Um, because if let's say we have a view that more EVs are being produced and these cars are having more sensors in them, let's say we want to find LiDAR stocks in US, right? So these are all the names, and none of them would actually be in this watch list, because these are more like traditional producers of like cars and car parts. But if you think about it, when you've got EVs, they require different types of components that are maybe not manufactured by the incumbents. So there's only one, I think, from this list that surfaces here. So is it the same company? Probably not. Um, yeah, I mean, Microvision is one of them. Yeah. So then you might want to add a few of these companies in this list and then start doing your research properly. It's a bit fiddly, but once you get used to it, you can use these lists forever, and you will remember these names for the next 2, 3, 5 years. Once you've learned something, you never forget it. It stays somewhere. Okay. Any questions here? No questions? Okay. I think let's probably end the session here itself. Otherwise, we'll be a bit too long. Um, it's maybe we should open up for some questions that you might have. Might be on any topic, and then we close off from here. Go for it. Any burning questions that you might have?
Question from ISM index, the
Uh-huh.
primary metal seems like having an inflection point,
Yep.
right? Do you have any view or thoughts on that?
Once again, I think this is 101 reshoring, manufacturing reshoring happening.
Yeah. Okay.
I think they did have a commentary around this. Automotive order demand continues to be consistent and on a steady pace. So they are looking to hire more people. Pricing is holding firm, having to work overtime to cover plant inefficiency. Okay. So that's telling you a bit about one particular industry. But you can also find companies involved in this space and then look at what they are saying, right? The companies are telling you everything. So it's a question of you getting to the company as quickly as possible and then eventually figuring out what they are saying. Just bear with me. I'm trying to, yeah. So if we do primary metals here, so that's the other thing, right? Different platforms have different ways of classifying these stocks. So in this case, there's nothing around primary metals, but it's called metal fabrication. Go figure. Yeah. So look at these companies, right? If you sort it by the largest, spending 10 minutes on these companies would tell you a large part of what's happening in the industry. So Carpenter Technology, that's a company that's involved in aerospace and a lot of manufacturing of alloys that go towards aircraft and defense companies. MLI, that's a company that's involved predominantly in plumbing, piping, and a large part of it is in housing, but also other parts in industrial segments. ATI, cannot remember what they do. Let's just quickly look at this. Again, it's like specialty materials, high performance materials. Yep. So whenever you see high performance materials, that's typically for aerospace and defense, like spacecraft, aircraft, whether it's civilian airplanes or military airplanes. That's typically where these alloys are used, a bit in medical equipment also. Yeah, so you can just pick up any of these companies and just yeah, that's our favorite, right? Protolab. Yeah, it's been selling off a bit. Let's see what this is doing. So we called it somewhere here, right? I think it was 28, if I'm not mistaken, when we started discussing Protolabs. No, maybe somewhere here. 28, 30. Yeah, yeah. I think that's where we started calling it. And then it had this big, massive quarter. So Protolab is a little bit like Trimble in that it's a transformative strategy that's being implemented. Well worth keeping on top of this thesis as well, Bhavan. So boring low PE value stock with a transformative strategic approach around 3D manufacturing and all these techie terms.
Yeah.
Okay. So you could find a traditional metal fabrication company, or you can go for these ones where there could be significant inflections because the management is executing a strategy that's transformative. Yep. What I'm trying to show to everyone here is there's an infinite number of ideas. It's all staring at you in your face and in your faces, and you're just refusing to walk the first step to go towards them. The stock market moves every single day. You just need to be able to find a few of these guys, call them correctly, position for them, and that's about it. Is this an understatement, Bhavan? You think?
Definitely not.
So yeah, I mean, look, my job is to show you there's a method to do this. Your job is to pitch up and, be a lifelong student and do real work on these things. So if you spend time watching Netflix, that can easily be made more productive by just switching off your TV set and doing proper work. When you're 60, you're not going to remember the fucking Netflix series that came out and gave you dopamine for like a week. Trust me, you're not going to think about that movie or series. When you're 60, you're going to look at your bank account, your asset base, and you'll be like, that's a proper life. Now I have so much peace of mind because, I've done so much in my life. I've seen so much around in the world. And even if I were to go bankrupt tomorrow, I'm happy to start over again. It's not a problem. But if you've been accumulating Netflix series and stories, dialogues, and, whatever people watch Netflix for, at 60, it's a very bad place to be if you haven't, pitched up for yourself, like I always say. I just, I just need to be blunt and truthful around these things. The vast majority of people are just mere spectators. They will do as much work as just watching a YouTube video and, getting dopamine off other people's achievements or videos or whatever. I call that living vicariously through others. A better way to do this is to find your own ideas, win on your own, celebrate your own wins. That's far better than spending time watching Netflix and all of that nonsense. If if you really like Netflix, buy the shares. Don't exchange your time or, your time, intellect, and energy sitting in front of TV watching mere pictures. Okay, what else do we have? Yeah, I cannot do it comp now. It's a bit too late. We can look at it later, maybe in the Discord server. It's a company I quite like in the real estate space. So this is similar to EXPI. If you remember, Bhavan, it's a tech company involved in real estate. So you remember we were looking at this at $4, right? With EXPI. So EXPI didn't work out, but comp looks like it's on the brink of breaking out. Yeah. But yeah, this is something maybe you have to. I mean, if you feel strongly about this company, let's write a thread, share your thesis on this, and then we'll discuss whether this makes sense to go long or not. So there are a few earnings to watch out for this week. A few of them in home building. We've got SSD where I'm participating. There would be a few more to keep on top of. So yeah, keep your eyes peeled, do the work, and yeah, be closest to the truth. That's the recipe for winning. One thing I can promise you is we'll be discussing a lot more winners. So whether you participate or not, whether you learn anything from it or not, is entirely your own business. Yeah. I think people need to become a bit more self-sufficient instead of me being like a parent and having to bring people back to, the drawing board all the time. There's a lot of fantastic materials being discussed in the Discord server. And I cannot believe for the life of me that people don't take advantage of this. I mean, if I were beginning as a trader, I'd be printing a lot of these conversations. That's how meaningful they are. This would be my study material. And yet we have people who just read this and it creates no like brain wave or zero brain activity. I think that's criminal. It's a disservice to yourself. Just being very blunt, you know. I think the days for being diplomatic are gone, as we have Trump in place. We just have to stick to the truth, because that's what will benefit you at the end of the day. If you're reading the Discord server and you're like, yeah, yet another winner, and you're not participating, it's time for you to interact very differently with the Discord server. Okay, so that's my little message for the week. Be more active, pitch up for yourself. It's good for your health, good for your physical, mental, and financial health. Okay. Until then, till we speak again, stay safe, take care.